I just made some major moves in my personal dividend portfolio. I'm gonna go ahead and cut to exactly what those moves were. I sold out of 3 different stocks and added a completely new position to my portfolio, and you can see this brings my total holdings to now sitting at 30. Now, to understand why I made these moves, you need to understand what the goal of my personal dividend portfolio is. The goal with my personal portfolio is to build a perpetual cash flowing dividend portfolio that will allow me to one day live off dividends. And ideally, I'll do this through dividend growth stocks, which will pay me more in dividends year over year. And if we come over here to my notes section of my do-it-yourself investor toolkit, which by the way, you can download on my Patreon page at the link in the description, we can see this move helped me get closer to 2 of my long-term goals with this portfolio, and that's sell out of all positions that don't align with my long-term goals, and I want to get my total holdings closer to around 25. Now, when I first started this dividend portfolio around 10 years ago, I made a lot of mistakes, as you may already know. At that time, I was only investing around $50 a month into my dividend portfolio, and I was focusing on very high yielding stocks. Now, the problem oftentimes with investing into high yielding dividend stocks is it can feel good for a moment. It feels like you're maximizing your dividend income, but this can actually hurt you long term if you're someone looking to live off dividends. Oftentimes, the reality with high yielding dividend stocks is you can see very little capital appreciation, you see little to no dividend growth, and at times even those dividend payments can get cut. All 3 of those factors can greatly inhibit your ability to one day live off dividends. And so what I've done is I've sold out of 3 positions that no longer align with my long-term goal to be able to live off dividends, and I would consider the mistakes that I made years ago. So let's go ahead and look at the 3 stocks I sold out of before I show you the new stock that I added to my portfolio. And the first one is Omega Healthcare Investors. Now, this is a real estate investment trust, and I've actually seen decent gains from this position. I sold it at a net gain of around $200, I believe. Over the past year, this REIT is up around 4.36%, and it has a very nice high starting dividend yield sitting at 9.07%. So when I was younger, around 10 years ago, I felt like this was a great company to add to my dividend portfolio. But as I've learned more about the power of dividend growth and how it allows you to live off dividends, I understand that dividend growth is much more important. So when I look at this 5-year dividend history, we can see essentially no dividend growth during this time period. Keep in mind, over the past 5 years, inflation has eaten away at the purchasing power of the dollar. So technically, this company is paying out less in dividends every single year because of its lack of dividend growth. The same is true for the second company that I just sold out of, and that is Verizon Communications. This really just isn't a very high quality business. It does have a nice high starting dividend yield, but just look at the past 10-year price return, down 18.24%. And again, when we look at the dividend history, something you'll notice with Verizon over the past 10 years is those dividend payments have been increasing slightly over time. But if we look at these dividend growth rates, I'll scroll down, we can see the 3, 5, and 10-year dividend growth rates all around 2%. Meanwhile, inflation over that time period has been higher than that again, meaning that their dividend payouts have technically been decreasing year over year. Those dividend growth rates absolutely have to be higher than the rate of inflation. And if we jump over to the last stock that I just sold out of, we have Medical Properties Trust. This is probably the worst investment I've ever made. While on paper, it looks like the company is trading at a very good value, they're having a lot of problems with tenants and legal troubles as well. Not to mention they also have massive short interest, probably pushing the stock price even lower. But here's the reality either way with this company. Even if it does have a nice bump back up, it still doesn't really fall into my long-term goal of being able to live off dividends, because yes, it has a high starting dividend yield, but I just don't see those dividend payments being as reliable or growing at a rate that feels healthy to me. And in fact, we even saw a massive dividend cut from this company earlier this year. So again, those 3 companies are great examples of mistakes a lot of newer investors make. They get caught up focusing on higher yielding investments instead of focusing on the quality of the business and its ability to increase dividend payouts year over year. Now, if we jump over to my dividend dashboard, we can now see my expected yearly dividend income has actually dropped down to around $4,923 after selling out of those 3 positions. And we can see just around a month ago, it was sitting at $5,118. So it dropped down by about $200 after selling those 2 higher yielding investments. And what's crazy about that is doing that will allow me to make more dividend income long term and will also allow me to live off of dividends at a faster pace. So let's go ahead and have the big reveal. What was the newest addition to my personal dividend portfolio? And this is actually a company I talked about in my 10 dividend stocks for 2024 video, and that is Louis Vuitton, stock ticker LVMHF. It's currently trading at around $725 a share, and I added it just a day or 2 ago when it was trading at around $707 per share. Now, at the time, the company was trading pretty close to its 52-week low of around $690.66 a share, and over the past year, down around 17.57%. Now, this company has a much lower starting dividend yield, close to around 2%. It looks like it's sitting at around 1.93% as of right now. But if you jump over to the dividend tab for Louis Vuitton here on Seeking Alpha, click on dividend history and scroll down. Let's go ahead and break down what we're looking at. There's a couple of different things we need to point out. Yes, we are seeing really nice dividend growth over time, but this is a company that pays out dividends semi-annually, and we can see typically the first dividend payment of the year is the larger one, and the second dividend payment is a little bit lower, and this has been pretty much the trend for the last decade or so for this company. If we scroll up and look at the dividend growth rates for this company over the past few years, we can see absolutely massive dividend growth, with the 3-year dividend growth rate sitting at 36.62%, the 5-year sitting at 16%, and the 10-year dividend growth rate sitting at 13.9%. Now, one of the absolute golden metrics for looking at the health of the company is looking to see how its free cash flow per share has grown over the past few years. Now, keep in mind there are 5 different things a company can do with free cash flow. They can reinvest back into the business, they can pay out dividends, they can buy back shares, pay down their debt, or they can attempt mergers and acquisitions. So right here, we can see our free cash flow per share with the company. And if we look at this charted out, you can see it has absolutely exploded over the past decade with very good growth rate projections moving forward. This is the exact type of thing that I want to see with all of the companies that I invest in my dividend portfolio. For my dividend portfolio to be a dividend growth machine, I need the companies I invest in to be a free cash flow machine. And I also think this is a company that has some very nice competitive advantages. For example, Bernard Arnault is the founder of this company, and he has a famous quote where he says, "Luxury goods are the only area in which it is possible to make luxury margins." This is a phenomenal point. They sell luxury goods, and if we look at the margins for this business, if we jump over to the profitability tab here on Seeking Alpha, look at the gross profit margin for the trailing 12 months, 68.72%. That's phenomenal gross profit margins, especially for the line of business that they're in. And while I'm not going to do a deep dive into the valuation of this company in this video, I'll be doing that soon. Go ahead and take a look at some of the insider buys we've been seeing from the founder Bernard Arnault himself. He bought 4,517 shares on October 27th of 2023. On November 10th of 2023, he bought 18,814 more shares, and then he just recently added 22,050 more shares on November 28th. So in the past 3 months alone, the founder has added massive amounts of shares to his portfolio. So what can we make of all these insider purchases from the founder of this business? And this reminds me of a great Peter Lynch quote that I actually posted about on my Twitter/X account just the other day. Insiders might sell their shares for any number of reasons, but they buy them for only one: they think the price will rise. Again, that's a great quote from Peter Lynch. So if that tells us anything, there is a lot of confidence from insiders in the current valuation of this business. I personally think this business has the potential to be a quality compounder for years to come, which makes it a great option for my dividend growth portfolio. So while in the short term, it does feel like this is lowering my expected yearly dividend income, I know long term, this will provide me far more dividend income. And for complete transparency, I added around 3 shares at a purchase price of around $707, and we can see this added around $41 of annual expected dividend income. So again, to beginner dividend investors, I know this move can seem counterintuitive, but if you want your portfolio to be a cash flowing machine for the long term, you have to assess the quality of their businesses and their ability to increase free cash flow per share year over year. Now, if you're someone later in your investing journey, obviously it does make more sense to seek out potentially higher yielding dividend stocks. But if you're someone with a long time horizon, I think a company like Louis Vuitton has the type of fundamentals that you should be looking for. So with all this being said, we can see my cash position is now a little bit higher as well. We can also see my portfolio value getting very close to $153,000 with around $26,754 in gains, and my future portfolio outlook is looking as strong as ever. So there you go, there is an update on the major moves I just made in my personal dividend portfolio. And like always, if you'd like to join a community of dividend investors and get access to any of my spreadsheets, you can head over to my Patreon page at the link in the description. You can also sign up for my weekly newsletter at the link in the description, where I go more in depth into everything you should know as a dividend investor. So with all that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.